Ladies and gentlemen, I know it's been quite a while. It's been quite a while, but the market is hasn't really done anything too significant since the last time we really did a video. I think it was about a month ago or so. But I've been very active and focused within the community itself. It has been growing tremendously. So a lot of my time has been, dedicated towards that as well. But I did want to go ahead and get on here and, really dive deep into some of these markets once again. As you see here, we are in some of these Bitcoin positions here. What I'm really doing is trying to, again, position myself for a potential swing. We are near previous all-time highs here. So I also see that we swept some liquidity right in there. And another reason why I wanted to even make this video was to really explain how sometimes the setup or the accumulation schematic, distribution schematic, that itself can be used as liquidity before price continues to run in whatever desired direction it chooses to run in. So just to break it down for you really quick, let me go ahead and show you an example of what I mean here. Let's just say, for instance, price is uptrending, it's making higher highs and higher lows, and retesting the previous breaks of structure, maybe going a little bit deeper, things of that nature. But I also wanted to show you that sometimes price may want to go lower than the previous higher lows and use that low as liquidity being swept before continuing higher, right? So this also does happen. And on higher time frames it'll look something like this, but on the smaller time frames, once that low gets swept, I want to illustrate what's happening here on a smaller time frame. So for instance, let's say again, price was making the higher highs and higher lows. Let me just continue from where we were. Boom, higher highs and higher lows. This is a smaller time frame, and then we all know that the setup is some type of liquidity being built. Then we sweep that liquidity, break structure, and then continue higher on that retest, right? But sometimes you may get that retest, and then we fail to make new highs, and then we end up coming lower, and we may even sweep this liquidity, right? We may, start making some lower lows and lower highs. We think it's a downtrend now, and then all of a sudden we come beneath these lows. We sweep those lows, sweep that liquidity, and then we play around and maybe even shoot back up higher. Boom. In that instance, this whole entire accumulation schematic was just used as a liquidity sweep, especially on that way up. It's just a wick. It's a wick you see on a higher time frame. Of course, on the smaller time frame, you will see the accumulation schematic, and this is essentially what's happening now on Bitcoin, right? Price has swept liquidity from previous lows. We immediately reversed, and now price has created another accumulation schematic and potentially can push higher and create those new highs that we're looking for, which would then perpetuate the overall idea of bullishness. So that's essentially what we're looking at on Bitcoin. I wanted to really illustrate that here before I show you the live chart once again. But as you see, right, higher highs and higher lows, price is making that bullish behavior, and then we get to previous all-time highs. Once again, we make some new highs here, and we all know that this is the setup that everyone loves, right? The liquidity being built up, we sweep the liquidity, don't quite make the new highs yet, and then eventually, with this candle, we do break above those highs. If that's not enough evidence for you, we come back again, break above these same highs. That's really giving you the setup. Price finally works its way down, creating those lower lows and lower highs, building up more liquidity for you. We end up sweeping these lows. Right? This is the setup that is accumulating, right? That's the accumulation schematic. Everyone thinks that, hey, it's going to work out. People are getting in buys right here. It's retesting the structure. But then, boom, the buyers get cooked. And then we end up even sweeping the stop losses that are placed here. And what happens? Price immediately reverses, break structure above these highs of this liquidity that was being built up, and then now we're here. So this is yet another accumulation schematic happening right after we sweep the liquidity of the previous schematic. So this is an example of how the setups can be used as liquidity. So that's why I always mention, hey, the setup is still valid until a full body candle closes over the lows. Sometimes those lows will get used as liquidity, as entries. These people are using these as entries to continue price going higher. So when you set your buy limits, you want to set them, of course, on the breaks of structure, but you can also set them on the stop loss itself. You can set it on the swing low itself, on the Wyckoff spring itself. And what you'll tend to notice is that that also will be used as the imbalance, right? That'll also be used as the imbalance on the higher time frame. On, let's say, the weekly, that same low that we swept is actually a weekly imbalance as well. And that's another example of what I mean when I say that lows and highs are the accumulation and distribution schematics. But on the higher time frame, it's just a wick. But when you go down and dissect it in lower time frames, you see that that same low, right, is the accumulation schematic. So this is why I urge the importance of studying Wyckoff. I urge the importance of understanding market structure. I also urge the importance of understanding candlestick anatomy. If you don't understand those things with full-blown confidence, I don't want to see your chart, right? People will mark up everything else but that. Get that down first. Mark up the basics. Let us know that you understand what the market is telling you on a non-biased level, because market structure is not subjective. It's not up for debate. A break of structure is a break of structure, objectively. No one else can say that it's not, right? If you clearly break structure to the upside with a full body candle closing above a previous high, that is a break of structure. That's undeniable. There's no debate for that. So that's why I love to at least have that marked up, have the objective truth outlined in front of you, have the blueprint to the objective realities and truths of the market first, and then add on all that extra shit at the end, right? But don't come to me with all these indicators and that and this if you don't even have the basic structure marked up, right? But that's my 2 cents. Thanks for coming to my TED Talk. I hope you got some value out of this. Please leave a comment and let me know some other videos that you want to see from me, or anything else you think I should be doing or going over, because, I'm here for it. I'm here for it. We can do anything we want, so let's make it happen. I'll see you guys in the charts. Let's have a great week.